All right, so welcome everybody. Again, this is Dr. Keith Wade. Today we're going to focus on, and I didn't do a formal PowerPoint on presentation or anything like that. I really want to show you a tool I've been using for a while called Divergence. And I'm going to show you how I use it. It's been something I've always liked, but now that things can be programmed so you don't have to think about it as much, it's something I've been using a lot more over the last year since I had a program. Okay. And so I'm going to talk briefly for those of you that may not know what diversion is, at a high level what it is. And then I just really wanted to go over examples on different time frames to give you a feel for it. Okay. So I don't know, maybe 30 minutes today. I don't think it'll take long. And then I'm also always happy to answer questions and so forth. Okay. So what I thought I would do today, I'm going to start on the daily chart, and then I'll go to a 4-hour. I'll go to smaller time frames with other examples. Okay. And we'll go from there. And then if you want me to look at anything, I'm more than happy to look at, some as well. But this is a chart of NVIDIA. Okay. And let me talk about what divergence is first of all. And again, for those of you that are more experienced traders, I'm not going to go into it very detailed, and we don't have to, but just stand by while I let the others kind of know what it means. So what divergence is, folks, and it's super powerful, first of all. Okay, if it wasn't, I wouldn't have it. Okay, because I don't like to have indicators just to have indicators. Okay. But typically what divergence is, and when you look at this chart right now, I'm assuming you can all see my thinkorswim, so yell if you can't. Okay, it's when you see my orange line up here. Okay, so when you get a new high in price, okay, and at the time of NVIDIA here, okay, right here where the arrow painted, okay, once it's painted and you go to the next bar, that will never go away. Okay, it'll always be there. But as it's developing potential divergence, it'll say over here on a label, potential divergence, okay, in this case, potential bearish divergence, and that can go away if it doesn't meet the criteria at the end of the day, okay? But what divergence is, folks, is when you get a new high in actual price, okay? And again, I'm using Hakanachi candles here, but you can see the white line is the open, the red line is the close. Okay, so in this particular case, when we closed, we had a new high in price. Okay, and it doesn't mean all-time highs, folks. Okay, not necessarily anyway. It's within the formula I've created. Okay, with x amount of bars and so forth. Kind of my secret sauce that I've realized over the years. Okay, but anyway, so we had a new high in price without a new high in RSI, okay? And I'm using a traditional RSI for this calculation. It works the best, okay? I back tested all kinds of oscillators, okay? So we had a new high in price, but not a new high in the oscillator, which is the momentum indicator, right? And so in many cases, what that means is this. In this point, we're getting very close to a short-term top in the market. Okay, it doesn't mean you're going to have a market crash and NVIDIA is going to go down to 200 bucks. Okay, and it may just consolidate for you. Okay, or in this case, again, I wanted to show you a really good example to start out. Okay, this doesn't get much better for a couple reasons. We have divergence at a new high. Okay, that's typically when that happens, you're going to get this move down. Okay, this was a pretty nice move down, right? So again, we had a new high in price without a new high in momentum. Okay, that's divergence. They can go on both sides, and I'll show you both sides. Okay, so that's the real complicated formula for divergence, right? I told you it'd be simple. So how do you place something like this? Okay, well, what most traders have done in the past, at least if you watch a bunch of videos and so forth, they like to do exactly like it did here. They like to use it to pick tops or bottoms in the market. So in this case, to pick a top in the market, okay? But in reality, let's say we took this and we were already long. Okay, so you can do that. Okay, you can do it based off of picking a top in the market. Okay. Or if you're in the trade already and then you get divergence, you may decide to exit the trade or reduce your size. Okay, that's another way you can look at divergence. So it's not just picking tops or bottoms, but it's also looking for, if I'm in a trade, maybe it's time to get ready to exit or reduce some of my risk in that trade. Okay. So basically it's to pick tops or bottoms. If you're in the trade, maybe getting close to exit the trade. Or in some cases, you know, if it's following, let's say you get divergence that's then going to follow a nice seasonal longer term play, right? Then you can start positioning into that particular trade. Okay, those are all the ways I use divergence. Now, what I wanted to show you today is a really simple strategy. So if you have divergence and you know it, okay, when would you enter the trade? Okay, that's what you can ask yourself. So let me blow this up just a tad. Okay, and I use other indicators, as you all know, that follow me here, but I just want to give you a simple strategy today. So once you get divergence, okay, the day that it has the arrow, when that next bar opens up, as long as that arrow is still here, okay, then it's never going to go away. So you can go right on that next bar if you want. Okay, you can go short. I don't do that. Okay, when do I do it? Well, and today I'm going to show you a good way of waiting for Hackenacci to turn colors for you then to take it. So once you get a red Hackenacci candle, which would be a yellow dot, okay, that could be your entry point. Or if you want to be a little bit more conservative, wait for that second red Hackenacci, which would give you your red dot, okay? And then when would you exit the trade? You could stay into the trade until you got a green dot or a yellow dot, okay? I prefer green. I want to give it time to run on some of these trades, okay? So this is divergence based on getting a new high in price, okay, but not having a new high in basically it's the traditional RSI oscillator, okay? You don't have to see that because it's programmed for you, okay? As you get to know me a little bit, I like things in the background to be simple. I don't like confusion, okay? All right, so, you know, that's just an example where we had a new high in price over here, okay? So we started getting potential divergence. In this case, it took a while to paint, okay? It took a while to paint, and then on February 11th, it painted, closed. Now I'm looking for a red dot or a red candle to get into this trade, okay? Yes, that's correct, Walter. I purposely didn't put the RSI on here because you don't need it, okay? I actually use, to enter a trade, I'll use the Hackenacci candles or a Laguerre RSI as my actual entry points then, okay? So I didn't want to have another oscillator on here to confuse things. It's all in there for the program. Basically, when you get the arrow, it met the requirements, okay? Good question. Okay, so that's NVIDIA. Let me go in to ANF, okay? So here's a couple on ANF. Right, so right here, it went here, it painted, okay? And then we had a continuation right here. So my point is, it does not mean, even though this would have been a nice little trade right here, right? On the day, this is the daily chart still, folks, okay? My point is, if you were in this because it's in an uptrend on Abercrombie and Finch, okay, then maybe this is when you exited, when you had the arrow painted and you waited then for a reversal in the Hackenacci, okay? That's a good way to exit. In this case, if you were picking it, you were in this trade long, right? You exited, saving yourself a little bit of profits there, and then it went higher again, okay? And then just recently, on February 24th, we had another divergence right here on that daily at a new high, okay? And now it's been really respecting this moving average, but with earnings today, okay, we'll see what happens. But what it's telling you, if you were in this long, uptrend, maybe right here, it's time to start looking to protect yourself or get out of that trade, okay? Yeah, as soon as divergence starts, based on my calculations, you'll see it. And you see like right here, here's a great example, okay? It'll tell you if you have potential divergence again right here. And then when you do, it'll go away, okay? So I'll show you some more examples. It'll make sense. Okay, so this is AER on the daily chart again. Let me blow it up for you so you can see the yellow line. Okay, we had divergence, and let me show you actually the indicator. So the bearish line is the orange, the bullish is the white, okay? So here we've got bullish divergence. It painted right here on this green arrow, okay? Then we actually had a combo long, which was a nice play. So if you're looking to go long on something, when you get that bearish divergence that's painted, okay, that could be extremely powerful, okay? And now just recently, we're looking at the potential bearish divergence on there. So if you were in here long, maybe now it's time to take your profits, okay? So here's an example here. Again, you have a new high price at the time, okay, without a new high in the RSI. So if you start having some sideways days, you're not going to always get big moves up or down, okay? So let me be clear. It's an indicator that will be on your screen that you don't even have to focus on it until it starts showing. Then at least you need to be aware that you might have potential divergence, okay? So again, if you got out here, you just saved yourself some consolidation here, okay? It's just another tool, okay? I don't trade just with divergence, but I think it's extremely useful, okay? All right, now let me go to a 4-hour time frame, okay? So let me go to 4 hours. Okay, let me blow this up just a tad so you can see it a little bit better now. So here's an example again with bearish divergence on big lots. Okay, it painted here. And then right here. So again, the reason I wanted to show you this example. So right here we had divergence. Okay, so if you went on the next candle right here, you took a little bit of heat on this 4-hour chart, right? Again, to me, the better play has always been waiting for Hackenacci to turn red. Then you can take this move down, okay? Divergence does not mean the next bar it's always going to make the move. Okay, let me repeat that. Divergence does not mean the next bar it's always going to make that big move down or up if it's bullish divergence, okay? It means we're getting close, if in most cases, to a top or a bottom short term, okay? So I still like to use an entry technique after divergence is formed, okay? So let me make that really clear. Aggressive traders will go in right after divergence. I don't like to do that. I like to wait for my signals, okay? All right, any questions on that? Let me go back a little bit on AMD and see if we have any other divergence. Because it'll stay there for you. So you can just kind of filter back in your chart and just see if there's another one. So here's one right here. You can see that, right? It painted it. We had a new high in price without a new high in the RSI. So then if you wait for, in this case, we had to go through earnings, right? That'd been a riskier trade. But then the next dot was red. There's your divergence. Okay. So again, you can always go back through your charts and look to see if a particular stock, futures, or Forex is working well with divergence. Okay. Okay, let me bring in some other examples here. So let me bring in the 1 hour chart. So I'm going to go now from 4 hours to 1 hour. Okay. Actually, I wasn't going to show you for big, but let's show this one. So this is a perfect example, folks. We have the divergence right here. Again, it does not mean that the next bar that you pick the exact top, right? But because you have this divergence, okay, now you know you're probably getting close to a short-term top, okay? So if you were in this trade long, maybe you reduce your size or exit the trade, or if you're looking to take that short, see how the Hackenacci turned red right here? Okay, this is your better entry right here. Okay, granted, it went against you a couple of days, then it rolled over for you. Okay, or hours, 4 hours. Okay, but that's a better play than just taking on that first divergence pattern, in my opinion. Okay. Well, it depends. So one of the questions is, what time frame do I use? So the biggest part of my trading is swing trading off the daily. Okay. But I love the 4 hour. Okay. And if I'm doing some day trading, I love the 5 minute and the 1 minute. Okay. It really just depends. Yeah, this is definitely being recorded. It really just depends on what, your goals are, how long you want to stay in a trades and so forth. Okay. Divergence works on all time frames, monthly, yearly, 233 tick. Okay. You just have to know how to size it then, right? And exit that trade. Okay. All right. So let me bring in AMD. So here's an example again of a bullish divergence, right? So we had a new lower price without a new high in RSI. Okay. So again, when could you enter? You could enter on that first green Hackenacci. Again, just an idea. Any entry techniques you want. Some will go in aggressively on that next bar. Okay, but if you got in here, again, this is a 1 hour chart. You were making money in a few hours there. Okay. It does not mean it's a trend change forever, especially if you're going against the overall trend. You're probably just looking for a retracement. But when you have divergence that's in the direction of the trend, especially in the direction of seasonality, okay, then that could be an actual change in trend. Okay. All right, let me bring in some smaller time frames. So I'm going to go to the 5 minute chart. Okay. I wasn't going to do it again with AMD, but it's here. So we have one right here. See where the arrow came? And then we had this down move. We had this new arrow, then another divergence. That's almost a double top too. And you had that. Okay. Pretty good example there of how powerful divergence can be. Okay. Let me bring up the S&P. So again, this is a 5 minute chart, folks. Okay. So we had potential, we had divergence right here, made a little bit move back to the moving average. Then we had another one right here. So again, in this case, you're against a massive downtrend on that 5 minute chart, right? So if you're taking these type of plays, you're not looking to make hundreds and hundreds of ticks, right? But if you were in this trade, maybe you exit it, if you were short, or if you're looking to scalp it to the other direction, absolutely, right? This has been a really nice trade as well. Okay, so you can use it on, like I mentioned, not just for picking tops and bottoms, you can use it for exiting trades, entering trades in the direction of the overall trend as well, okay? How about crude oil? Yeah, so here, if you're interested in that product, I'll bring it up again. But just so you have it here, I'll put the link in there, okay? Okay, so here's an example on crude. You had divergence right here on the 5-minute. It made that little move back. Then you had one here. I love to see new recent lows, folks, with divergence. Okay, those are my favorite opportunities using divergence, is when you have a new high or a new low, and then you have divergence in that going in the direction, against the high or low. Those are fantastic scalps, okay, off a 5-minute. If you're in a daily, right, you're not scalping, you're looking for bigger moves, but okay. Then we had one right here on that 5-minute on crude, and it made a nice little move down here, okay? So again, if you were long here, then maybe that's your exit point, right? That's what I'm trying to show you. There's two ways to use divergence. If you're in the trade, maybe it's time to reduce size or exit the trade. Or if you're looking to scalp using divergence, okay, it's very, very powerful. Let's see what else we have here. And nothing recently today, okay? All right, let's take a look at Bitcoin. 5-minute chart. Well, this one just happened today at noon, okay? Have a divergence right here and right here. So again, if you waited on this one until you got a green Hackenacci, all right, right here was the enter, you gave yourself a better opportunity there. Let me back up and see if we had any more recent on Bitcoin. Here was a smaller one right here. Here's one right here that picked the top nicely for that move down, okay? But what's nice about the indicator is, one, it's effective, but two, then when you're looking at your favorite instruments to trade, right, it stays painted for you so that you can go back to see how accurate it's been working on that particular, again, instrument, whether it's stocks, futures, Forex, and so forth, okay? All right, now let me go to the 1-minute. And let me type in the ES again, because I know a lot of you love to do some scalping on the ES. Let's see how that worked today. So on the 1-minute chart here, we had a divergence trigger here a little while ago. And again, that's a beautiful trigger on a 1-minute chart, right? You made your money. Let me just go back. Here's another one back here on the 1-minute. Divergence to the upside. So you can use the indicator obviously on both sides of the market. But again, if you were already short and then you get this divergence and the arrow paints, meaning it's now an official divergence, okay, maybe that's when you take the rest of your profits, because more than likely you know you're going to get a bounce, right? Or if you're looking to go long, then that was a perfect long trigger when you got your green Hackenacci, okay? Here's another one on the 1-minute right here. So you can't make this stuff up, folks. Again, I wouldn't be doing a webinar on divergence if it didn't work. And I love it on all time frames. Okay, it's just a matter of, what is your favorite time frame? Okay, what is your favorite time frame? And I use it on multiple time frames. So here's another one where, again, if you were long on this one, once it painted, right, again, you don't have a huge move down on this 1-minute, right? But it's just basically then consolidating. right? So if you got out of that, you're saving yourself some consolidation there, okay? Does that make sense? All right, any questions on that? When you say what is the passcode, I'm sorry, I don't know what that means. No, this can add this you can add on to any of your charts. Yeah, it's just another indicator you can add on there. Okay. And when the criteria is met, it'll show up. So let me go back to, let me go to a 4 hour. And why don't you guys ask me something that you want to see? Give me a stock, futures, or Forex. Anything? Any recommendations for me to type it in there? You want me to do the EL? Okay. All right, so EL had a divergence trigger right here. And then the red dot trigger was right here. Okay, so again, another good example where in this case, off a 4 hour, it took about another day for it to make its divergence move. Okay. Let me go back a little bit and see. Here's another one right here. 9 o'clock on Monday. Had a nice divergence trigger there. Okay. Again, you can use any time frame. I just have it on the 4 hour right now. SNA. So we're getting close here, right? So look at this, folks. So watch this over the next few days. So we have a divergence at a new high, right? Again, I don't have a red dot yet, but I would be pretty surprised between now and the next week, we don't get a nice 4 hour short play, okay? So great one to really look at, Daryl, on that particular case. Maybe that's why you picked it. Excellent. All right, yeah, so we can go back on crude on the 4 hour. Sure. Is that link not working for anybody else? Just try it out. You know, it doesn't, you shouldn't have a password, but I may have to look at that. All right, so on crude on the 4 hour, we actually had one here, right? But look at that, no red dot until this divergence right here, and then you had a nice little run down, right? So again, that's a beautiful way to get into a trade when you have, and there's another one on crude right here, okay? And I mean, that's a nice trade. So if you got in on the red, you know, at the open here on 61.44, you know, went down here, that's almost $2,000 a contract. Yeah, yeah. Copper, sure, I can review copper. And if you want a different time frame, just type it in. Okay. Right now, this is just for Thinkorswim. So here's another great example on copper, right? We had it, then we got a red dot right here. And if you went short, you took some heat before it rolled over on it. Okay. But you're giving yourself a good opportunity knowing you're close. What I would have loved to see is a divergence right before this high. Then I would have sized in nicely here. Okay, those are my favorite again. When you get divergence right at the high or the low, those are fantastic. Okay. Oh, absolutely. So if you were long on copper, because those of you, that trade with the only in the direction of the trends, right? Absolutely. You saved yourself here, and then when you got the green dot right here, you're back into it. Absolutely. Yep. Again, you can use divergence both ways. Absolutely. So let's see, when I click on that, somebody click on that link again, see if you have to do a password. I don't think you have to. Okay, it worked. Yeah, yeah. Now you don't need a password for that. All right, what else do you want me to look at, folks? Anything else, and what time frame? Sure, we can look at Tesla. What time frame on Tesla? I have it on the 4-hour. If you want something different, let me know. Okay, so here remember how I told you, when you get divergence right around that new high, this is a beautiful trade, folks. You'll just get used to it when you look at hundreds and hundreds of charts, okay? All right, and then here we had divergence right here. So the entry for me would have been right here on this green dot, right here, okay? That would have been a bad signal. But then you got another one right here, okay, right here. And then if you wait for that green dot, you got a little bit of your divergence right there, okay? Right there. So let me go further back. So what I like to do on a stock like Tesla, right? I don't want to short Tesla. But what I like to do is take profits at the divergent signals, okay? Because you don't want to fight that massive trend up, okay? In my opinion. Now, if you're looking at smaller time frames, so let's go to a 5-minute, okay? Let me go back to the front here. Bear with me, let me grab it, get to the front. Okay. So we had divergence here, and then you had your second divergence here, and that had a nice move down. But again, I don't like, in this case, being such a strong stock. I'm looking, if I'm getting in off of 5-minute, I'm taking smaller profits and getting out. Okay, I'm not looking for a big move. Okay. Now, if I get divergence, what I was looking for is divergence on the bottom side, bullish. Then I'm looking a little bit more excited about that. Yeah, everybody will get a copy of this. Yep. So ES on the 15-minute and 30-minute. Sure, Alan. So let me type in ES. And I'll go to 15-minute. Blow it up here. Let's see if we have any divergence. So the last one we had here, we had this divergence right here at a recent high. Again, beautiful trigger. Okay. Had a little divergence right here. Then you had your move down. Okay. That was the last one we had on the 15-minute. Now let me look at the 30-minute. See, do I have a 30-minute on here? I don't trade the 30-minute very often just because I don't. Nothing wrong with it. Same thing. It's going to look very similar. You have this nice divergence here. You also had some bullish divergence here and here. Okay. So the one thing that I really want you to take away from today with divergence is it going to work 100% of the time? No, but it certainly means something. Okay. And if you're in a trade and you're looking to exit, and you get divergence, that might be your point. Or if you're not in the trade and you're looking for an entry and you get divergence in the direction you want to go, okay, that can be an excellent way to get into that trade. Okay, divergence has always been super powerful. It's just, you know, before all the programming that's come along, the most difficult part is finding things. You know, you might have your 10 favorite stocks you like to trade, for example, or you may be day trading, you know, a 5-minute or 1-minute chart, and, you know, all of a sudden, you know, you have to have your RSI, you got to draw the line, you have to look to see, and so forth. So yeah, let's look at the NQ, okay, for you folks that like heart attacks. All right, let me go to a 1 minute on the NASDAQ. Okay. All right, so we have our last one right here today, and you had this nice little move back. Okay, nice little move back. Let me go back and see. So here you had divergence on both sides. You had one here, and then you had one here. Okay, and then you had one here. Okay, so again, my point is you're not going to see them all the time, especially if you're trading off daily charts. But when you get them, they are powerful. Okay. Okay. Any other questions? So again, I'm going to put in the chat, and again, I'll be setting out this recording. But if you're interested and you want it, $100 off right now. Okay, so you can click on that link, and you'll get $100 off. Other than that, make sure you're joining my Wednesday webinars. Okay, now you'll understand more about divergence. Yeah, absolutely, I can help load the indicator. Very, very simple process. Right now, it's not for NinjaTrader. This is just for Thinkorswim. It'll be ready for TradeStation soon, and then after that, I go to NinjaTrader. Okay, so right now it's just for Thinkorswim. If you're looking to get TD Ameritrade or Thinkorswim, you can email me. But you just go to tdameritrade, I think, .com, and then the nice thing about TD Ameritrade is you can open up for like $10, you know, a live account, or $50, I think, and their charting is no cost. Okay, so what a lot of people will do is they'll use Thinkorswim charts, but then they'll use a different broker to take the trades. Okay. Not really. One of the questions is, you know, so this is programmed with traditional RSI. I tested them all with MACD, with all the different oscillators. Okay. And I have found the RSI to be a little bit better than the others, but they're all fine. Okay, they're all fine. Basically, what you're looking at is you're getting an increase or a decrease, you know, a new high or a new low in price, but the momentum isn't agreeing with that, and that's powerful. Okay. The moving averages on this chart, yeah, I can show you. So this is just an exponential 50 and 20. Okay. Again, I like to keep things simple, or I use Bollinger Bands, you know, one of the two, standard Bollinger Bands. Okay. Absolutely. All right, folks. Well, again, if you have any questions, you know, please reach out to me. I'll put my phone number in there as well. You can always text me. Yeah, I've been wanting to have this for a while now on Divergence, because I get so many questions on it when they see it on my webinars and that. And if you need anything else, just reach out. Other than that, hopefully I see you all tomorrow on the live Wednesday webinar as well, folks, and have a great rest of the day. CJ, let me stop the recording here.